Righto, Money Miners, welcome back to another week of mining news. Big stories today.
Give it your oomph, Ali. Where's the money energy?
Let's try again.
Money.
There we go. Matty, be proud.
Oh, he would. So today we've got Azure, bit of interesting action articles all happening there. We've got the massive Westgold Karora deal announced this morning. Galena, Sierra Rutile, the fumble in the jungle continues. Syrah, Capstone Silver Lake. Jeez, it's a bloody big one today.
Yeah, we're gonna focus on the first two shows there. I find the Azure deal fascinating. Trav and I both walked down to the EGM today to vote on the proposed takeover.
We didn't vote, but we watched other people vote.
We did. And then you've also got the big deal, Westgold and Karora. So let's rip straight in. Why don't we start with Azure, guys? What do you reckon?
Mate, this is the deal that just keeps delivering. I feel like every junction there has been a twist in this deal, and it just always captures the imagination. And today is literally no different, because we're staring at the screens today and you see Azure's share price. Now keep in mind there's literally a deal, like a binding transaction documents are out. There is a deal on the table, and you know, bloody shareholders are expecting to get $3.70 in, you know, short order, and yet the share price is trading down to like $3.30 odd today. The morning of an EGM vote for shareholders ultimately vote upon the scheme itself. It was just so intriguing that it captured our attention.
We had to walk down, didn't we? You summarised it well there, Trav. The stock was down over 8% on the day. I think it got as low as 325 or 326. Well over 8% down on the morning of no real news. And of course, you mentioned the EGM, so alarm bells are going off in our heads. What's going on? What's the deeper story here?
And then you see this AFR article out, very timely, this morning of the EGM.
So the article itself, why don't we get into that and sort of summarise what captured that, because that is the only real indicator as to why people might be concerned about the deal going through. So the article touches on the earnings that Chinese companies have had in Australian lithium companies. That's through profits, that's through selling blocks of stakes. So you've got blocks of stock, rather. So you've got Ganfeng at Mount Marion, Tianqi at Greenbushes, Cattle, of course, about a bit less than a year ago now, sold a huge block of Pilbara Minerals shares. And you've also got a few other deals in and around there. The article then moves into FIRB and them really trying to, start to play their role a bit more in vetting these deals. And of course, they blocked Asteroid from taking control of Alita, which MinRes went on to scoop up. That is, of course, the Bald Hill asset at the core of that deal there.
So ultimately, this AFR article kind of poses the question about, will FIRB play a bigger role than the market is anticipating in their ultimate acceptance or rejection of this offer from what is called SG Mining. It's a joint venture between Hancock and SQM.
Yeah, and you've got Team Azure, the company itself, the advisors, the shareholders who want to see this deal get done really refer to this one as a bit of a hit piece. They think it doesn't. They certainly think it's not a coincidence that it came out this morning, and they are pointing they're trying to point the fingers at who, and we'll get into that later on. Who is got the most amount of interest in a story like this coming? But I think we should start with why this deal fascinates us so much, and there's a few reasons that come to mind. We love the characters involved here, and there is no shortage. You've got Gina, you've got Creasy, you've got SQM, and Chinese influence there as well.
Don't forget Allison was involved at one point.
Exactly. You've Tony Rivera.
Tony Carmanis Rivera. You got interesting bankers and lawyers on both sides.
Exactly.
Full complement.
So you've got the characters, and then you've also got the volatility with the underlying lithium price having been so volatile since the deal was announced. Remember, the first bid that came forward was in August, around the time of Diggers. That got kicked back, and then it got re-announced in December. And most recently today, and as well when the news of MinRes selling their block came up, the returns on offer. We know there's a deal on the table, so you can do some pretty quick back of the envelope math and see what you could potentially earn. So as a bit of a proxy here to look through those returns, we can use Lithium Power. They had assets in Chile. They received a takeover offer from Codelco. And that ultimately closed last month. Now, there was an extension to that, ultimately was extended by about 5 weeks from early Feb until roughly mid-March. So
in that instance, FIRB basically just needed an extra 5 weeks to make the decision, which was ultimately, like, they didn't get in the way of that deal. It completed, they just needed more time. And what you're doing is you're saying, okay, if you assume that's the precedent here, 5 weeks, then you could back out a risk-free in quotation marks, rate of return if you bought Azure today and you held it to completion and you got paid at completion.
Exactly. So let's be a bit conservative and say that, 5 weeks becomes almost 2 months. And, as things stand now, Azure is about 1 month from the implementation date. So call it 3 months total to be conservative, you're still getting a 45% annualized return from the level they closed at, roughly.
So baked into the share price today, you'd have to say there is some fear of this deal not completing. Like, that's the kind of only way you can really fathom it, right?
Absolutely.
Yeah.
But do you think realistically it'll end up like an LPI situation where it's just FIRB taking its time and it's just that? Or is there some sort of smoke coming from a fire somewhere?
That's the question we've got to ask. And I mean, as a sort of side question, why does FIRB take so long to do this? Is a whole other question. The deal's been going for months.
Yeah.
I don't think we're going to answer that one, but...
It's exactly that question that you asked, Ali, was the reason that JD and I this morning are like, we've got to fucking go to the EGM. It's like 2 blocks away. It starts in 15 minutes. Like, we've got to go. And because we just wanted to get a sense from the people in the room, the bankers, the lawyers, the board, the bidders, everyone, you really wanted to get a sense, like, does it actually feel like this deal is at risk of FIRB rejection? Does anyone in that room feel or think that way? That was the question we're trying to answer.
Yeah.
And how did you find it?
Well, firstly, we got great compliments for how we were dressed, coming in our slides and shorts and whatnot. And
my old colleagues, who still wear a suit every day, and I don't have to, motherfuckers. So, nice of you to dress up today, Trav.
So, let's go through who was there. You've got bankers, obviously. You've got people eager to get the deal done on many fronts. You've got reps from SQM, from Hancock, from Creasy Group, who obviously have the stake in the asset as well as through the company Azure, 20 to 30 people. Everything that was put up for vote went through without a hitch. The deal, got voted through by the Azure shareholders. No questions were asked to any of the points that were raised. And, whether it was sort of acted or not, there was a lot of confidence from all these advisors and all these people that we spoke through that this deal is going to go through without a hitch.
But that was the takeaway, right? There was if you looked at the people in the room, but we spoke to the advisors on both sides, and everyone had a vested interest in a deal completing. You'd have to say, a lot of people get paid on success, which is a deal completing, and a lot of people. So it's like you can kind of take that confidence and that sentiment with a grain of salt to the extent people have a vested interest. But I didn't leave there getting a real sense that that there were
something awry.
Yeah, there were people close to the deal who kind of were placing a large weighting on the probability of FIRB rejecting it. That's not just there were actually there were a few people there who were maybe there's a guy sitting behind me from a family office who was looking to see whether or not they should be buying Azure today because the discount on offer was sort of an opportunity scouting exercise for them. There was some sell side people looking at sort of justifying the dealer notes they're sending out to buy Azure on the dip as well. And through all the conversations, it didn't really seem like anyone was too pent up on the probability of a FIRB rejection. They just sort of thought the share price was quite trigger happy, as it's been in the past in the context of an AFR article this time, not MinRes causing havoc. Yeah.
So, I mean, the point we need to dive deeper on is this Chinese ownership in SQM, because that's really what's brought about the debate and the volatility today. So Julio Ponce, he's the controlling shareholder at SQM. And there shouldn't be too much doubt around that. He controls this shareholding group that owns 25% of the company. And then you've got Tianqi, well known to Australian investors with their presence in Greenbushes and whatnot. They are 22.1% shareholders in SQM across SQM's two-tiered capital structure. And we've seen in the past Chilean antitrust courts support SQM's independence from their second biggest shareholder, Tianqi. So they've enforced a capping of how many Tianqi elected members can be on the board. That's 3 of a board of 8. And then you've got Tianqi, well known to Australian investors with their presence in Greenbushes and whatnot. They are 22.1% shareholders in SQM across SQM's two-tiered capital structure. And we've seen in the past Chilean antitrust courts support SQM's independence from their second biggest shareholder, Tianqi. So they've enforced a capping of how many Tianqi elected members can be on the board. That's 3 of a board of 8. And there's a few other aspects in terms of trade secrets and how the business is run, which Tianqi are insulated from. So SQM is not a Chinese-controlled entity. It's controlled by Julio Ponce, despite Tianqi's large interest. And, of course, this deal is a 50-50. So that would mean if this deal were to get up and in the current JV, Tianqi's indirect interest is about 11%. So,
And that's 11% of 60% ownership of the asset, right?
that's exactly
So
right.
it's even further.
Exactly. So, of course, Creasy owning the remainder there. So I think it set a very tough precedent if FIRB were to reject this deal because of what we've just highlighted there. The percentage ownership overall in the asset isn't that massive. There's loads of companies. Obviously, these are all sort of deals that have happened in the past, but Ganfeng have almost 6% in Pilbara. You've obviously got Tianqi at about 26% at Greenbushes. Mount Marion has Ganfeng as well. There's heaps of these ownership stakes around the country, and it could potentially backfire if FIRB were to get very, very tight about this. And I don't envy their position. There's lots going on.
Yeah.
But lithium is one of those commodities where China does need our output, kind of like iron ore, which has been really demonstrated in recent times. And, unlike wine, barley, and other commodities, which really got put to the sword over the past 3 or 4 years. So the next point, to perhaps sort of flesh out is what would happen if FIRB would block the deal. I think it's worth touching on.
Even before that, like the other point too is like it's not like it's in consortium with Gina. Like who's more bloody patriotic than Gina? You know what I mean?
About Australian and Australian assets, yeah.
Yeah.
Anyway, I know like that's just like a minor detail in the whole thing, but there was some murmurings of there was a dealer note that had done the rounds, which sort of drew the string that potentially MinRes might be lobbying for the potential for FIRB to have a say in rejecting this. Now, if you assume that's true, and that's probably a stretch in itself, but if you assume that's true, how the hell are Min going to have more lobbying influence than Gina? Like, good fucking luck.
Yeah.
No.
I couldn't agree more.
And do you think the fact that it's in consortium with Gina sort of softens that kind of FIRB concern?
I think. I mean, I don't actually know if it's possible to influence FIRB very much. I don't really understand how the regulators work, but
I guess as far as having an Australian influence in there.
I would have thought it does nothing but enhance its probability, to be honest.
Yeah, I'd agree with you. Now, we mentioned the aspect of risk before, and you need to touch on what the potential downside would be because, of course, it sounds great, this annualised return that you could hypothetically earn, but you've got to weight it against what the downside could be. And lithium prices have been super volatile since the deal came about. So, we're talking about 40-odd% annualised return, but there's a very real risk that if this deal does get voted down by FIRB, the stock could have quite a dramatic fall, kind of like we saw with Liontown. Obviously, there's a bit of a different scenario, but just to give people a bit of a flavour of what could happen if the deal gets blocked. So
there are unanswered questions, right? And that's like, was it we always talk about a story doesn't just end up in the AFR for no reason. Like someone has thought that's a bloody great story to be in the AFR this morning, and they've tipped off a reporter, or they've bloody written half the story for them, or something along those lines. Typically happens, and that person or party or entity may very well be motivated to have an influence on the deal or the share price or whatever today, and we don't know how to answer that question.
Yeah. Just to round out on the point before, that if they were to get blocked, it wouldn't. I think it would, in all likelihood, kill the deal, but it doesn't by default. It means perhaps you have to restructure it. But there's no interest in, Gina really pressing all out for it, knowing that she's paying very much top dollar for the asset, right?
If block the deal,
it's in all likelihood it's dead. Yeah,
I just think limbo. Yeah.
So
I mean, things will just progress under AZS's banner with Gina as a major shareholder. In
yeah. But that leads us to the point you just made there, Trav, of who would be interested in putting this article out, or who has a different sort of motivation. And one of the names that gets kicked around is MinRes and Ellison. Now, it's pretty hard to come up with a lot of names that are not China aligned by nature of the industry and whatnot. So MinRes, I'm sure they'd be feeling pretty happy today that they'd sold their their block of stock. And Ellison has been vocal in the past about de-Chinaing the business. He pulled out of the deal to have the downstream plants built in China. That, could tie hand in hand with other parts of his strategy going forward.
Well, I always think the share price reaction today is, in some parts, a function of MinRes, pulling out of their position earlier. I don't think you would have seen as much of a share price reaction today. And granted, it's on pretty low volume, but I think people have in their memories, well, Min sold at $3.42 or something along those lines, right? So they're like, now it's kind of confirmation in some people's heads. Well, did Ellison know something we don't? And like my line of thinking when we first talked about that is, I don't think that's the case. I actually just think there's balance sheet pressures are probably real there, or there was some opportunity that needed funding, which came about. But now people are probably questioning that.
Yeah, I see what you mean, but I think you kind of like answered it in a sense. The low volume going through really pushes the stock around quite a bit. So that's what's moved it quite strongly.
Who else do you guys reckon could have a bit of, I guess, reason to want to have this article out today of all days?
One of the names we kicked around is Pilbara, and I don't think this one passes the test, but it's probably worth having a quick chat about. Hypothetically, if they did want Andover, it wouldn't really stack up in a FIRB sense either because of their the ownership stake that Ganfeng have in them. Not to mention, like the same with most of these players that we're going to talk about, almost all the offtake goes to China, so it's kind of ridiculous. But yeah, I don't think it would work. And then
I still don't think you can actually get control though, because if the scheme fails, it triggers the takeover. I mean, you can't do like a game theoretical scenario where, like, Pilbara gets this. It just doesn't work out that way.
But, and then the other cynical take would be short sellers. Now, there's only a 1% of Azure stock being sold short at the moment, so perhaps they are interested in just cashing out of their position. That 1% has kicked up since the beginning of Feb, since the Min's incidents have happened.
So Min sold their position. Some financial institution has thought, fuck, like, got to short this. This deal's probably not going to pass, and now they might be thinking, well, how do I get out of this so I could
send a little article to EFR. That's the way to go. But it's kind of,
maybe if that climbs up, then that was the answer. Yeah. Sorry, if that goes
reduces,
down.
So it's kind of frustrating thinking about it for quite a while this morning, and I don't think we really came to a solid answer on who has the strongest interest in this article, in this quote unquote hit piece going out. So that kind of leaves us here. But in the meantime, the stock trades at about $3.30. I'll sort of be very intrigued to see where that trades over the coming days.
Yep. And your math for 40% annualized return, like there might be more uncertainty around how long it takes FIRB, but it's such a fascinating one for that reason. And look, JD, this is a bit off topic, but still a bit on topic. I had a peek at the scheme booklet that was lodged to ASIC in relation to this transaction. I found a few gems I thought worth mentioning in that scheme booklet. Number one is the obscenely large size of Gina's war chest. It's growing, right? There's this line in the scheme booklet in relation to how Hancock supposes to fund the transaction, and it says this: as at the last practicable date, the Hancock Group has cash and cash equivalents of approximately $19.5 billion. Billion.
Wow.
You found that? Cash. Mental.
Cash.
Just Gina things.
Got to be one of the most, liquidly rich people on the planet.
Amazing, mate. Just
The
amazing.
interest on that, geez, alone.
Yeah. It's just a staggering number. Number two, some indicators of when this asset might actually get into production are in the scheme booklet too. So there's this from Deloitte, the independent expert. They say, through discussions with Azure management, we understand they are aggressively targeting first production at the Andover lithium project by end of calendar year 2029. Now, JD, there's only one way they can feasibly get into production that fast, I reckon. They're going to need to turn Andover into Swiss cheese. This still isn't a maiden resource on the project, but they're undertaking a 100,000 metre drilling program right now, and frankly, I don't think that's enough. Not unless you pick up the phone to Ryan O'Sullivan or Steve Swallow at K-Drill this instant. Look, you do not want to miss the next lithium boom because he didn't drill fast enough. It's just that would be an atrocious thing to do. You just couldn't live with yourself. So Gina, with that $19.5 billion cash you've got, I think the sensible thing to do is to put it to work with the drill bit. In fact, I think Gina would be watching the rate of progress and should be less than impressed right now. I saw this sentence from the independent technical expert within the scheme docs as well. I'll read that out. Exploration drilling is continuing, utilising 6 diamond drill rigs and 1 RC rig. Now, Ali, JD, back the truck up, right?
Can't make Swiss cheese with that.
No, you can't do that.
They need to take a leaf out of David Flanagan's book and just go hell for leather at it.
Pepper the shit out of it.
100,000. We want to see that done in 6 months. The next lithium boom is going to be here before calendar year 2029. Come on, get into it.
You got one of the most substantial discoveries in the last decade, and the best we can do is 6 diamond rigs and 1 RC rig. Would Gina be content with that? Oh, I don't think she would be. Maybe that's why the deal will fail. If it fails, it'll be that because of that.
It's the K-drill risk that's priced into the share price.
Risk. So to SQM and Gina, if and when the deal completes, you know who to call to turn Andover into Swiss cheese by the drill bit. It's Brian O'Sullivan at K-Drill. They have RC and diamond drilling capability. They do it fast, they do it safely, and they get more meters in half the time because if the drillers don't, they have to have those drillers have to have a little chat with Ryan. And I hear that some of those drillers, they don't come back from that chat.
And then you've got Ryan's hands as well. Yeah. So it's just
use K-Drill.
Well said, Trav. Well said. All right, let's talk about the big deal actually going ahead today. So
another mega gold deal we've got, a merger of equals.
Another massive merger with no real synergies. But anyway, maybe that's contested.
I reckon Wayne's been listening to Money of Mine. The amount of times I heard the word talk on the call. Well done, Wayne.
We'll play a catalogue of talks from Mr. Wayne Brownwell.
This business will have torque to accelerate cash flow, gives this new business a lot of torque, and this is a much bigger business with a much more torque to the gold price.
There you go. Love it.
Love it.
All right, so let's talk about the deal highlights and a couple other aspects and then rip straight into what we think of the deal. So just to start with a bit of an overview of what's happening, Karora shareholders are getting 2.5 Westgold shares plus 68 cents in cash. And here's the kicker, 0.3 shares of a spin-out co. Now, this spin-out co is one of the most ridiculous spin-outs I've ever seen. It's going to be made up of Karora's 22.1% Cali Metals shareholding, plus a lithium royalty, a bit of deferred consideration, and roughly $5 million in cash for an all-in valuation of $29 million.
JD, I hope that can we just never talk about that again? Like,
got my mouth watering.
Let's just put that to the side and never ever anyone ever mention that piece of crap spin out, and we'll just talk about the stuff that matters now.
All right, so
just divest.
What actually matters in this deal?
Here's another thing. While we're actually on the topic of things that kind of irk us, they are sort of merging the boards in a sense. You got 6 people from Westgold being joined by 3 representatives from Karora. That makes for a board of 9 people. That is way too many for a company of their size. So I'd very much like to see that one trimmed down to a more appropriate size pretty quickly.
Maybe some of the board members can get a gig on the spin out instead. Anyway.
We digress. So in terms of resources, you've got 13 million ounces. That includes reserves, so 3.3 million ounces in reserves. And then you've got measured and indicated totaling 5.3 million ounces and the remainder in the inferred category. FY24, this is the headline. They're going to be a producer of 400,000 ounces. And in terms of all-in sustaining costs, again, for FY24, these numbers recently blew out a little bit on Westgold's part due to the rain. So a midpoint of 2,200 Aussie dollars. Karora's was around $2,000. So they report in US dollars, and they also had a bit of a kick up as a result of a few different factors in the past quarter or so. So the proposed entity is going to be dual listed ASX and TSX, which sort of speaks to the index inclusions and these sorts of things, which we'll get into. And lastly, in terms of approvals, they need 66.6% approval from Karora's shareholders. So
this still doesn't have the traditional regional synergies you see. So
it does not.
Is it a good deal?
Yeah, and I mean, like, stepping it back a bit too, like, you know, Karora, obviously, they were in discussions in exclusivity with Ramelius, and then that got leaked and the deal kind of just disappeared. Exclusivity ended and immediately Karora were in exclusivity with another party. Well, it comes out today that party's clearly Westgold because there's an agreed merger on the table. Now, neither Ramelius nor Westgold actually had regional synergies. You look at a map and you see, obviously, Westgold, they've got their 3 processing facilities and gold mining hub in the Murchison region, and then Karora, it's a goldfields sort of Southern Goldfields region there where they've got, two processing facilities. Now, but I think to your question, Ali, is it a good deal? There's nuance, right? Like the rationale is the most important thing, and like even though there aren't those regional synergies, I still think this is a good deal for Westgold because, like, if you just look at the time series of their share price, like in less than 18 months, Westgold's share price has risen effectively 4x, despite the fact that the portfolio of assets the company held fundamentally has not changed. What did change is the gold price and the strategy with those assets. But what I mean is Westgold's portfolio of operations, they're a high-cost portfolio, effectively. If the world changed tomorrow and gold sold off, the shine wears off Westgold fast, unfortunately. That's the nature of being a high-cost miner. So what you want to do in a rising gold price environment, if you were Westgold, is use your script when it is re-rated to buy something that materially lowers your cost basis. That gives you longevity and protection through the cycle. And that's what this deal does for them, I think. In the scheme of things, the premium on offer here is not crazy. The number they report is like a 10% premium to last. I think, to be completely fair, you need to look at the premium to Karora's undisturbed share price before the Ramelius media speculation. Yep. If you do that, the premium's more like 22%. But, since then, the goldies have run a fair bit. So, like, net off 8 off of that just to, be fair, given peers have run. It's effectively a low 10s% premium here. And I'm a believer that, it materially improves the corporate appeal of Westgold, which is important.
Yeah, let's get into that. Obviously, what you're referring to here is the assets and where they sit on the cost curve, and that's vital. So why don't we start with, the key asset in Karora, Beta Hunt.
And that's the point, right? Beta Hunt, it's a much lower cost asset than what Westgold's got in the Murchison region. Remember when we went to Westgold's operations, we did the podcast in the pit. I remember at some point Wayne making a joke, giving us a media award, and his rationale for, here's your media award, it was like a joke award, but the rationale was for interviewing Jake Klein. That was the noble thing that we'd done, which in the scheme of things is probably not very noble, interviewing an MD. They're not very rare accomplishments to be able to achieve. But, in my head, it kind of triggered something. And I think my gut feeling is Wayne has identified the Evolution playbook as the pathway to create shareholder value. Evolution's playbook was a stepping stone approach, right? You can't start off with low cost assets. It just doesn't work that way. But you can buy them if you use your script at the right time to do so and progressively lower your cost basis. And before Evolution cooked their M&A track record by buying Red Lake, they did some great deals, and those deals progressively lowered their all-in sustaining cost, allowing the company to trade at larger and larger multiples. Now, Evolution took that to the extreme with the copper credits, but the premise is the same with this deal and Westgold. I think the pro forma cost base per ounce is a hell of a lot more attractive than Westgold standalone. And that, rightfully so, allows a gold company to command a higher multiple than otherwise.
And so on that, Trav, as far as that taking that evolution approach, sort of cycling into these lower cost assets using your script at the right time, do you think that might actually see them cycle out of some of their more high cost operations as a result of this deal?
I think that's a pretty good point, and I wouldn't be surprised to see that in due course. Like, I don't think it's like a desirable thing for a gold miner to just have scale for the sake of scale. I think wanting to improve your position on the cost curve and get progressively lower cost ounces, like that involves thoughtful acquisitions, but also divesting your operations at the right time. Yeah, and sometimes it's pretty hard to sell like high cost assets at the wrong part of the cycle, but at a certain point in the cycle, everyone wants a gold mine, so you can sometimes get a lot of cash for assets that otherwise wouldn't be worth too much.
Yeah, well said. I think we're very much at the right point in time for that to happen. So that analogy of sort of stepping down the ladder, getting rid of the ones that sit higher on the cost curve and picking up the ones lower, kind of is applicable, and you're in a good moment of time. I think we should talk about the synergies, or the non-existence of synergies here. They had a slide talking about almost $500 million in cost synergies or cost out opportunities. So,
But there's a bit of a nuance, though, right, in those numbers. If you read the
$490 million
details.
of targeted pre-tax synergies. I mean, I've put together
with a footnote,
my fair share of like M&A, like investor prezes. And when you show your pre-tax synergies, the you can show them a bunch of different ways. You can either show what your annualized like pre-tax synergies will be, like if they're just corporate synergies or whatever, and then like let people discount them themselves, or you show the NPV of your pre-tax synergies over time. That $590 million, that $490 million is neither of the above, is it?
Yeah, NPV involves a discount rate. So to give the thinking behind it, they've said there that this is 5% of 60% of the combined group's operating costs over the 10-year mine life. So they talked a lot about how their increased scale gives them more buying power. They can buy things cheaper, essentially, across the business. But the way in which they've calculated that is just all wrong, and adding up the annualized amounts and, presenting it in an undiscounted manner is just complete nonsense,
Yeah, I think it's always like important, I think, to be a bit dubious of synergies when you don't actually have like regional or like where you can't truck things to a different mill and those sorts of things in mining. Just be a bit like skeptical of it. I don't think that's the make or break of this deal. It's not about the synergies,
of course, but it makes this slide just so ridiculous that people just skim over it.
The devil's definitely in the detail here.
So let's get into
your model that they're making. $490 million.
Definitely don't. Let's get into the more meaningful bits of analysis here. The sort of trading multiples. Talk about it on a few different scales that we like to look at. You got your price NAV, EV to EBITDA. Trav, you drew up a couple charts.
Yeah, I mean, I can flash the charts up, and I still don't quite think these kind of capture the deal rationale or anything. Like, Westgold trades at 0.86 times NAV versus Karora 0.79 times. Karora 5.7 times EBITDA versus Westgold 3.3 times. So, like, the NAV multiple is a bit understandable when you look at the relative growth profiles the two companies have. And look, Karora trading at a premium EBITDA multiple also makes sense given its growth profile and the lower cost basis of its production. The thing to conclude from looking at the deal multiples is that this isn't a deal that got done because of the relative trading multiples. There's more to it.
Yeah, well said. The index inclusion is a super important part of this deal, and I think it's the sort of right time to talk about it, because you look at those charts, you look at the multiples, and you think, hey, it doesn't actually look super appealing. It's not, glaringly obvious from those numbers why this deal makes sense. But index inclusion is something that's not going to be captured in those charts, but I think it's a pretty vital part of this deal. And of course, the joint companies were pretty loud about their sort of bullishness on what index inclusion means for the combined entities. So
just on that point too, JD, like, remember when we had Rusty and Cav for our round table, and there was a bit of commentary that there's a weird dynamic amongst the trading multiples of the gold companies, that the big, you're rewarded for being bigger in some ways. Like the companies that trade on the highest multiples also happen to be the largest companies on the ASX in Northern Star, Evolution.
It's very disparate.
Yeah, which is probably a function of the way that index flows kind of, change the multiple you trade at. And so for a lot of companies in that next tier down, there's almost this funny incentive to do a deal even when you don't have synergies, because it might put you in the index and give you a bigger multiple, which creates value, even though your DCF might not change too much. But anyway.
Yeah, I know. It's something that, fascinates us. We speak about it all the time, how passive money in a way distorts markets, and that sort of passive versus active debate is
following scale for the sake of scale.
Exactly. And it's a real toss-up, because just before we talked about, not wanting to go for scale for the sake of scale, because it perhaps means you're going to be buying less attractive assets on all these sorts of things. So it's a balancing act, but the impact of passive money is, enormous. And in the case here, we're talking about a company that could be included in the ASX 300, the ASX 200, the GDX. They also want to maintain a dual index structure, being listed in the TSX and the ASX. They've got a pro forma market cap of 2.2 billion. That dual listing structure is perhaps not as great as it first sounds, because, like we've also spoken about in the past, you need to have a certain amount of free float and whatnot, and a lot of investors tend to flock to the index, the sort of primary or the home index. So it remains to be seen how liquid that secondary listing will be. and whether that fulfills the requirements. But nevertheless, they are going to be included in more indexes. So deals do tend to make sense on that merit. They just need to make sense on fundamentals as well for them to actually eventuate into good deals. So let's talk about the flow and implications, because we've spoken about a deal with Karora a bunch of different times. There's different angles to it. Who was the partner? But now that it's been identified that Westgold is the partner, there's a bunch of different angles we can take this conversation about. What does Ramelius do? What do all these neighbouring parties rather do? And also, what does it do for the combined entity in terms of their hungriness to do more deals down the track?
That's the one I'm really keen to talk about first. I almost think, like, first of all, the implication for Westgold, like they're going to have enhanced capability to use their own script now. Like, rightly or wrongly, there is a view out there in the market that you don't really want to accept Westgold script in a deal. We've heard that before. Yep. You've heard that before, right? And I think that perception has made it hard for the company to be competitive when it comes to M&A. Like, think of Ramelius and Westgold fighting it out for Musgrave. Westgold was never in pole position there. They were kind of, coming from a few yards back. And I do think this deal probably changes that perception now, because if you take Westgold script now in a deal, you're no longer just getting paper that might shrink in value when the market turns again. It's got lower cost ounces in its production profile now. And I think that's worth something that has a lot more kind of a lot more surety about it if you're on the receiving end of a deal. So I wouldn't understate what that could mean for them in their own M&A ambitions going forward. I
think it's definitely a big shift now going forward with that dynamic, and then you getting, say, even a further re-rate from all the bloody indices buying in as well, and that script just gets more and more value, and they should be prudent and smart to use that opportunistically.
But we want more M&A. So what's Ramelius going to do? Because they were, of course, the party that was first announced to be in discussions with Karora, and now they're in a bit of a position of limbo. It's glaringly obvious looking at their recent presentations that they need growth in terms of more ounces coming on down the track. They've got these sort of stranded assets just northeast of Kalgoorlie,
Becca and Roe, yep.
Yeah.
Exactly. So they're in a bit of a peculiar position.
This is the more interesting question for me, because, like we said, Westgold and Ramelius battled it out for Musgrave 12 months ago. Both Westgold and Ramelius have a big footprint in the Murchison region. Ramelius was in exclusivity with Karora until a few weeks ago. So with Musgrave, Ramelius got the cookies, but this time around Westgold does, ?
And I guess on that, what do you think Westgold saw in Karora that Ramelius didn't? Because I guess the proposition is, they're both majority, Murchison-based gold producers. Okay, admittedly, Ramelius got a few other hubs as well. What do you think happened there?
Actually, I don't know. Without being on the inside of the deal, it's kind of hard to speculate. But I think, like, one of most deals break down, people can't see eye to eye on value at the end of the day. And I don't know if the implied, merger ratio actually means that Westgold are paying more, or if things just broke down with Ramelius and Karora post the leak. It's kind of hard to know, to be honest. But
it is a tricky one.
I think, like, being kind of like was Ramelius going to be able to spin that deal in a way where they could articulate that there are actual, regional synergies with the Lakewood Mill and their stranded assets in Roe and Rebecca? Like, that would have been a hard thing to bloody convince the market existed. It was just too far away. So I just think you're staring down they're probably after it got leaked, probably had some feedback from their shareholders, like, what are you doing as well? Like, those things can play a factor. Whereas, Westgold, because it wasn't leaked, didn't have the burden of time that can kind of hinder these things as you cop a bit of feedback along the way.
So I guess if it's not Karora, they feel, obviously feels like they need to do a deal, and their script's pretty highly valued too.
Yeah, I'm in that camp that thinks Ramelius does need to do a deal, and if you're in that camp, then you got to look around, right? And I reckon the odds of them buying Spartan just shortened. Now, ding, 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 JD still owns some Spartan shares, so discount it from that perspective. You look at Spartan, there's Murchison region as well. Like there's clearly some like potential synergies when you kind of look at the lay of the land there for Ramelius. So like, but then there's the other part of the equation too. Like now that Westgold get bigger, Westgold's pro forma market cap $2.2 billion. Ramelius's market cap today $2.2 billion. Does the the actual merit of a Westgold Ramelius merger actually improve as well as a result of this? I think the answer is yes. I mean, like scale seems to be a big driver as per your talking point before, JD, around index inclusion. I think heck, this to me kind of like increases the probability that you get a big Murchison wrap up kind of story down the track as well, but that'll take time.
And do you think if that's something that is being considered by Westgold doing this Karora deal, sort of is them posturing to get a bit of a bigger slice of the pie
Probably.
of a Westgold Ramelius type situation?
Yeah, most deals there's a bit of ego and people want their company to be the one that lives on, and all that sort of stuff. And the only way you achieve that is if your company's the slightly bigger one in the deal. And heck, maybe Ramelius will be like thinking, oh shit, I need to bolt on some more market cap myself now to fend off Westgold. So I better buy a Spartan so I stay a bit bigger than
bigger than them.
Who knows how this stuff unfolds? But that's kind of like, it's those soft factors that do drive deals. Like it shouldn't, but it does.
Yeah, definitely. Those things, those biases, all play a big role in the human element of doing a deal.
Very good.
You got some any more questions on the deal, Al?
I think, it's just like we've had a few mega deals. We've had a few sort of, M&A deals between smaller explorers as well. Like, there's been a fair bit going on in the bloody first quarter of this year. Like, it definitely feels like this is just the beginning.
Yep. Yeah. The gold M&A is a theme that's definitely heating up. In our PDF, the director's special, there was an interesting contribution from Ben Bailey who talked about the potential, arbitrage in the value of ounces. And he kind of hypothesised that we would see more M&A from producers looking to build out their growth options by just buying resource ounces, because there was just a big discrepancy between how reserve ounces are valued by producers versus resource ounces by non-producers. Now, this deal isn't that, but I think it might be the prerequisite to some of that comes in the future. I
also think of the clock that Hedley Widdop, another contributor to the document we put together, and he, you can see in the evolution of the boom and bust kind of cycle that deals being done more aggressively, deals flowing down from the larger to the smaller companies is all a part of a sort of well-trodden, crash back through and up to boom cycle. So it's all part of the course.
Ali, do you think your Murchison menage a trois will eventuate in the long run?
Oh, I hope so. That was my first pick on the show. That would be great.
I reckon the odds are getting more likely, but they just happen. Those deals happen sequentially rather than all at the same time.
Yeah, definitely. So we shall see. It might be an eventual menage a trois.
Well, look, Ali, JD, I can't stop thinking about Wayne using the word talk on the webinar. Fuck, it was funny. We should play it again.
Play it again.
This business will have talk, a lot of talk, more talk.
And it got me thinking, guys. Talk. It's our new favourite word, but what does it mean? Well, look, the real definition is a force that produces or tends to produce rotation. Now, again, I'm going to go a little offbeat here, but I was reading some fascinating fun facts courtesy of a website I will reveal in short order. Have you ever thought about anything that rotates?
Yes.
The power applied to anything that rotates is the product of torque times speed. Think about it, right? Say, for example, the propeller of a King Air aircraft. Maximum power can never be achieved unless torque and propeller speed are both at their maximum. Now, I learned this fun fact on kingairmagazine.com today. But you know who absolutely did not need to read that on King Air magazine? Stuart Brooks.
Stewie Brooks.
Because Stuart, you see, he has been juicing his brain with aeronautical knowledge from the prime young age of 13, maybe 11. It could have even been 8 years old. And he just remembers it all. And when you see Brooks Airways servicing the mining industry with their big, beautiful King Airs in the sky, it just gets you excited. Show me the magnificent plane, JD. Bring it down here. That is, I believe it.
Look at that.
Look at the torque in those propellers, mate. Like, just bloody unbelievable. It's just so impressive. Now, aren't they marvellous? It's almost criminal that these aircrafts are so luxurious and affordable at the same time. I've heard various mining companies report that their flight costs have fallen 98% since switching to Brooks. Qantas, mate, fucking price gouges, I tell you. So if Westgold and Karora want any chance of getting those $490 million of undiscounted synergies from this deal, swapping to Brooks Airways is probably going to get them a few $100 million of the way there. Thanks, Brooks Airways and Stuart Brooks.
Stewie, talk
Not
Brooks.
to mention the 25 different assets that they'll have around WA. They'll need to get in touch, flying around. Brooks Airways, the only way to do it. All right, we've got a few more stories to round off on today. We'll go through these ones a bit quicker. We'll start with some pretty unfortunate news out of Galena.
Yeah, mate, it is unfortunate. I mean, Galena Mining, the silver lead producer that was ramping up the Abra mine, has unfortunately been put into voluntary administration. The stock's been suspended from trading since early January this year. The capital structure there is the interesting thing for me when I look at Galena. There's $161 million of senior secured debt owed to Taurus there. And I noticed that the administrators appointed Quartermentha, the same team that got the gig as receiver for SO4, where Taurus was one of the senior lenders too. Now, in the case of SO4, the lending syndicate was pretty keen to sell 100% of the project instead of roll the debt in any recap kind of entity, which ultimately went to 7 global investments for cents on the dollar. I think this time around, things could be different for a few reasons. Firstly, this time, the only senior secured lender there appears to be Taurus. Secondly, Galena is actually producing product. Albeit costs are not great, but there's some product being produced, unlike at SO4, where there was no product being produced. And thirdly, there's a JV partner at Abra 2 in Toho. So when you put all these factors together, I think things could prove to be less bad for Taurus this time around. Note I say less bad, not good.
Yeah,
I guess that's because they've got more levers they can pull as far as getting some sort of outcome or solution. And I guess the other interesting thing as well, like this is a silver lead mine. It's not a chemistry set that potash is. So that dynamic's a bit different too.
Exactly. And yeah, I mean, like personally, I'd be interested in seeing the project come back to the public market eventually with a much more serviceable debt quantum and with enough capital to get a sound mine plan in place and all the works is sort of evaluated on its merit then, because the debt quantum and the cash flow, you can't feasibly service that. So for Galena shareholders though, I wouldn't be as optimistic as Adrian Bias, who is quoted in the West as being hopeful. He's a big shareholder himself, but I wouldn't bank on Taurus having mercy on the shareholders.
Yeah, right. And now we've got a further update on the fumble in the jungle,
Sierra
Trav, your favourite story.
I love this one. I'm so sad I don't get to talk about it for very long today. We're going to have to save the full update for a later day, Al. But to summarise the quick version of it, the board of Sierra Rutile has come out with their formal target statement recommending shareholders reject the offer from PRM. They also put out a notice of meeting, including a bunch of resolutions for shareholders to vote on. Remember, PRM lodged a 249D. Mano Mining wanted to put Jean Joubert on the board, and Stan wanted to kick one director off and put another one on. So the notice of meeting is a great read for those interested. You'll see all those different resolutions and how the board thinks about them. But my favourite part of the notice of meeting is Jean Joubert's CV is literally attached as an annexure for those who are just as fascinated with this guy as I am. Look at the dot point there under the section core competencies. He's included a dot point there, core competencies, security. Wink, wink. What does that mean?
I love the headline. Visionary global mining industry business strategist and operations leader.
Oh, mate, it's a great read. There's there's a few important details probably omitted in his CV, but I'll let you read that one in your spare time. So, look, with all the other news today, I'm actually going to have to read the target statement after the show today instead of before.
Oh, good. We've got another interesting one, Syrah. So they wrapped up on Friday their entitlement, the retail component of their entitlement offer, and they came out with a little announcement today regarding the market and a particular sale that they did. So we'll start with the capital raising. It's all closed as of last Friday. They raised $98 all up, so quite a big raising. Now, 18 roughly of that was the retail component. Very importantly, this was fully underwritten. So of 37 million shares, there was demand for a grand total of 3 million shares from retail shareholders. That is a debacle.
Oh, wow.
So that means that the remaining 34 million shares, just shy of $19 million at the issue price, it was 55 cents, were allotted to the sub-underwriters. No doubt they'll be stoked with that result. You had Jarden being they fully underwrote the deal, but of course, sub-underwriters involved there, and they weren't disclosed. So on more positive news, today's announcement from Syrah.
Oh, just on that, well, I've got Ali here who's done more than her fair share of underwriting. Have you ever seen that much end up going to the underwriters, Al?
Oh, literally looks like almost 100% of the retail bloody went to.
Went to subbies.
That is, look, there's definitely been some high ones, but that's unusually high.
Out of 100 capital raisings that you did work on, like how rare is that?
Oh, it's definitely on the rarer side. I mean, you don't sub-underwrite to get 100% of the stock.
Yeah.
That's usually not the ideal outcome, right?
Who typically would be sub-underwriting that? Like, would it be the hedgies who were short going into it and they're just happy to take more stock because it means they'll close out
It'd be
more?
a mixture. You'd be maybe, opportunistic hedge funds or institutions. Maybe it's their first time coming into Syrah and they want to sort of see now there's a sort of selling product of that, get a bit of leverage into it. Could be a whole host of things, but certainly not the existing shareholders.
You wouldn't be
doesn't
expecting
look like.
or probably even really want the amount of allocation you get as a result of that sort of shortfall, though, right?
No, no. Getting a very high allocation of subbing is usually not the greatest sign.
Thanks for clarifying.
So on some more positive news for the company, a sales and market update today. So they sold 10,000 tonnes of natural graphite fines to an Indonesian group. Obviously, they've got this philosophy of being ex-China. So it's quite a big deal, actually. This is the first large battery-grade product sale that they've done to a non-China party. And I'm sure they'll be hoping this is the first of many, in a longer relationship with the buyer. So you've still got a lot of uncertainty hanging over the graphite market. Obviously, it's a very complex market. I'll show a chart here. You can see a huge drop-off in the exports from China post the decision that came out in November 2023 to essentially ban graphite export from China. So for natural graphite, exports are still extremely low. They dropped over 80% month on month from November to December last year. They've picked up slightly in February, but still very low. But if you look at the AAM, that active anode material, that has rebounded to its 2023 average level. So it's still below what the numbers were in November, but that's actually come back quite encouragingly.
And, mate, Capstone, how interesting is this one, right? So we've talked about Capstone Copper a few times because we noticed their announcements started to pop up on ASX's platform. And I remember last time we spoke about them, JD, you mentioned that you were intrigued that not a single share had traded on ASX since their listing over here sort of started. Well, now we know what the grand plan was the whole time, because Aftermarket Friday, it looks like there was a giant block trade, $593 million worth of Capstone Copper shares were offered to ASX investors thanks to a sell down from the private equity group Orion. Now, Orion owned 20% of Capstone before the block trade. That's now reduced to 12% ownership. But it's a pretty interesting move by the global copper miner who's clearly looked to capitalise on the dearth of copper names on ASX thanks to Oz Minerals vanishing, and very cleverly getting liquidity over here without the need to do any IPO of shares. Just bloody block trade your major shareholder to ASX.
Yeah, it's fascinating. When we'd spoken about it at the time, they had done a capital raise very shortly before, and I was intrigued as to why they hadn't done
on ASX.
A portion of that at least on their ASX.
And often it can take a bit of time for when there's, say, a dual listing here for the TSX stock to get shunted down, as they call it, to the ASX. So unless you do something like this to sort of really get things going, or an IPO of new shares on ASX, it can take a bit of a while. So maybe this is the boost it needed.
Yeah. Alrighty, last but not least, guys, Silver Lake, they came out with a pre-quarterly announcement, which the market received pretty well. They were up 4%. So they sold 64.5 thousand ounces of gold for the quarter. That's up 14% quarter on quarter. So it was a beat on expectations, pretty strong performance all around. And given the copper sales were quite a bit better quarter on quarter as well, it does look like Deflector, which produces a small amount of copper, was the asset that had performed quite strongly there. So we'll have to wait and see in the full quarterly, which will come out later in the month, what the actual breakout across the assets were and what the costs were. But they ended the March quarter with $342 million in cash and bullion, debt-free, so that's up $58 million quarter on quarter. They've also got that big stake of red stock, that means, with the investment, the cash and the bullion, they got $508 million there. So that stake rose by $30 million, given that the Red share price has been ticking up over the quarter as well. So the deal with Red still going on in the background, still looking like that'll go ahead. But
I remember when they put the deal docs out and they talked about that stake ultimately being monetized, de facto capital raise. But that's going to be a lot of cash that the pro forma has now.
Yeah,
when you look at the cash balance, the cash build, and the stake.
Yeah, it was very cheeky how they slipped that one in.
But if they,
docs.
I don't know if they monetize the whole lot, but if they choose to, the pro forma is going to have a lot of cash.
Yeah, pretty healthy position. A bit, contrasting with the Westgold Karora position that we spoke about earlier and what they've got. But yeah, wait and see on further updates for that deal.
Yeah.
Should be a very interesting quarterly season ahead. We'll sort of probably start seeing a few of these reports coming out in the next week or two, really.
Yeah, I saw WA1 put out one today on the bloody, the 8th of the month, which is, mate, that's
very snappy.
That's the goal. You want to put out your quarterlies. Like, if you put out your quarterly in the first week, you're just a superstar. Give yourself a gold star.
Not bad if you're not producing anything.
Yeah, probably a bit easier to prepare.
Alrighty, guys, got a couple partners to thank. VRIFY. Give Grant at VRIFY.com an email. Also got GetWet Solutions, Matt.hall, GetWetSolutions.com.au. Also got to thank DSI Underground, Silverstone, Anytime Exploration Services, WA Water Bores, Brooks Airways at the top of the show, and last but not least,
and K-Drill.
Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.